back.
Oh, thank you so much for having me. It's always fun to talk to you.
Well, I noticed you don't have your...
Yeah, so I mean, we are holding the 19.5 2017 high. So if we look at the chart here, we can see that if we zoom all the way back to 2017, we briefly pierced it, which is very normal because there's a lot of stops that are put there by investors. There's this kind of mentality that people were buying just above 20,000, so for it to flush below, psychologically, a lot of them will jump out and get scared, and then price usually recovers. So in the very near term, I'm in the camp that we still have a little bit more upside to go. So I could see us bouncing back to 25.5 or so, maybe even 28. But I want to caveat that with saying that this is still a bear market. This is still an ice age, like you referred to it as. The charts are still pointing to overall further downside. You're right about a lot of the issues that are occurring. The Celsius news, the Terra Luna collapse, all of those are very much like the dot-com bubble bursting in 2000. And I think that's what crypto is going through right now. And if there's one thing I remember from that period, it was the very, very start of my career, is that it didn't end with just a few blow-ups, right? You have to see more. You have to get more downside there. You have to get to a point where investors are ready to totally throw their hands up in despair. And while a lot of investors are still, they're hurting, the average investor, I think, is in from $50,000, $60,000. They're not fully ready to give up just yet. And I know that sounds horrible, but that's how market bottoms are put in, and that is ultimately what I think is going on here. So I do have a target that remains right around 12,000. So I fine-tuned it a little bit. The 12,000 level gives us a measured move. So if you take a look here, and this is kind of just some cool technical analysis, if you take this move down right here, right? So from this high down, which was a straight shot, then you had this kind of consolidation pattern. And then if you take this high down here, the measured move, meaning this distance to this distance, that's the exact distance from here to where the bottom should be put in. In addition, Bitcoin during its winters, its past bear markets, corrects 80 to 85%. If you correct that in this period, you get 12,000-ish, give or take, as well. So there's a lot of confluence of levels at around 12,000 where my next target is.
Is it a downward? So you were saying we could move back up and then to just shoot back down?
Yeah, markets are very much like that. I mean, we saw that over here where you kind of went up, you start, and this is the key, right? So when we were below 20,000, you saw so much bear market kind of sentiment. And the markets tend to wait and kind of lure people back in. So even in this mid area here, when we were back to these highs of 47, 48,000, I was hearing, oh, we're going right back to all-time highs. This is the big breakout. This is all that stuff. And the markets still need to kind of do that here, in my opinion, in which case they have to move up. You have to start getting that sentiment, that hope back. And the markets are evil like that, and not literally evil, but they like to get people to start to believe again, and then they crush their dreams. And that's just the way markets work.
Okay, so a few questions here. Actually, a lot of questions. If you feel it's going back down to 12,000, and if you were stepping in to buy, are you waiting for that level here?
No, so this is where it gets even more intriguing with how kind of a pro trader or pro investor handles it. So as much as I am a believer that there's a decent chance of going to 12,000, maybe even lower, right? I don't know for sure. There's also a chance it doesn't get there. So what I have done here is I basically selected, and I said to myself, how much money am I willing to invest in Bitcoin in this bear market when it gets down to this area or below? I took that amount, let's just say $1 million, right? And I divide it into 6 categories, 6 even amounts. And when we were at 19,000, I took my first 1/6 and I bought Bitcoin there. And what I'm going to do is every $2,500 to $3,000 down, I'm going to buy another 1/6 position, eventually accumulating a full 6/6 position, right? And so the idea is, I've been around the block enough where I understand that sometimes downside targets don't fully get achieved and sometimes they overshoot. So I don't try to pick the exact bottom. Once we get near, I just start slowly dollar cost averaging in, knowing that my long-term view on Bitcoin is still extremely, extremely bullish. 65K will be a low target for when this thing takes off in the next cycle.
Okay, and I want to get to the good news in a bit, but you said something before that made me think of an interview I saw with read with Mike Novogratz, where, you know, a lot of people have come out during this period, especially folks who never liked the crypto space, saying, look, we told you it's been a scam, and here it is, proof is in the pudding. He said this, Mike Novogratz, this has been a complete old school ass beating, but it is important not to throw the baby out with the bathwater, because we had a speculative mania in lots of asset classes. Bitcoin is not going away as a macro asset. Do you agree with that? Is Bitcoin going anywhere?
No. So I totally agree with Mike in that respect, is that this is actually, so this is the crazy thing about it. When you were at 65,000, what did we hear, right? We heard the influencers, the talking heads, everyone was, oh, it's going 100,000 by the end of November 2021, then 250, then 500, and it was ridiculous in that side. And now you're starting to hear the opposite. Everyone's saying, oh, it's a scam, it's going to go to zero. Those are actually contrarian views that as an investor you need to separate from your own emotion. Meaning the more I hear that, the more I believe that we are getting closer to a bottom. And basically it just comes back to common sense. Just use your logic, right? Logic is the most powerful thing in investing, but so many people get caught up in emotion instead to make their decisions. But if you think about how eventually we're going to slide back into a big recession, the Fed eventually is going to have to print more money. Central banks have already printed tons of money. There's a general need from a people's perspective all over the globe for this alternate to fiat currencies that cannot be printed willy-nilly. I mean, all of these factors make us need some sort of digital currency. Now you could say, well, gold could fill that role. I agree it does, but try, you know, sending gold over countries, right? I mean, you can't pick up a bag of gold and just walk to the airplane and carry it easily. The key to crypto is how easily it can be transferred from country to country, how quickly, and how, again, it doesn't have that endless printing ability like fiat currency. So I'm in the camp that this is now the beginning of the end of the drop. Yes, it's going to get uglier. Yes, it's going to get harder for a lot of investors, but I do think below 20,000 gets us very close to that bottom, maybe around 12, maybe sub 12. But in the scheme of things, when you're talking about a move from 65,000 down, we're kind of at the tail end, right? We've already come down 40, 45, 50,000. Now we just have to do maybe another 10 or 5.
Okay, so let me ask you this, Gareth. This is what a lot of folks want to hear. Because long term, over time, you are bullish Bitcoin. You feel like it is going to, you know, reach 65,000 and above. But it's not going to happen overnight, right? So let's talk about your time frame there and where you could see it headed.
Yeah, so time frame wise, I'm looking at, you know, so in past cycles, and all we do as technical traders is look at past cycles. That's all we have to go by. It usually takes about 12 months for Bitcoin to bottom out. So that means that puts us kind of later this year, November-ish, for when a bottom could be in. And then there's usually a 6-month period of just ups and downs, kind of making bulls think they're going to win, then they get smoked, and then bears think it's going to go lower, and then they're wrong as well. So that choppy 6-month period. So what I would say is by late 2023, so unfortunately, you still have at least another year of this probably, mid to late 2023, I think that's when the next move up can take place. And I also coincide that with my macro view that by that period, inflation will have come down to 4 or 5%, but the economy will be really suffering. And it's likely the Fed will then turn on the spigots again and start stimulating to try to get unemployment, which at that point has probably spiked to 7 to 10%. They'll start to get that down by printing money and stimulating. So watch for the Fed to start to do that. I think that's going to be a key for when you finally see Bitcoin bottom and start to turn around.
Let me ask you this, Gareth, and then we'll move on from Bitcoin. There was so much excitement of how Bitcoin would confront inflation, and it was supposed to be the ultimate combator of inflation. Is it clear to say and safe to say, look, it's just not, or would you say it's just still too young and hasn't matured to become that? Or will it never be?
No, I think it absolutely will be. It just has to mature, right? So I always love saying it, and I think this really sinks into people, is when you say, okay, Bitcoin is a 13-year-old, right? So it started in 2009. Here we are in 2022. It's the equivalent of a 13-year-old. I mean, for those of us that have kids, my kids are younger, but I've certainly known many 13-year-olds. I was one at one point, believe it or not. We weren't exactly rational. We were very emotional. We had these wild emotional swings up and down, and that's what Bitcoin's doing right now. It's kind of a very young asset. People are still trying to trust it, which makes it very volatile, versus gold, which has been around for thousands of years, and a big day on gold is like 2%, right? I mean, like, holy cow, gold moved 2% versus Bitcoin like 20%. And so you have to kind of put it in perspective and say, okay, we all want it to mature into this offsetting of inflation and everything like that, but you got to give it time. It probably needs many, 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 many more years before it fully kind of behaves more like that gold type play.
Let's talk about the rest of the crypto space here, because obviously some coins absolutely demolished here. Is there anything you would absolutely not touch right now, where you're like,
wow, so
no way?
In general, in a bear market, we want to stay away from the smaller, more speculative coins. I learned this the hard way in the stock market with small caps, where in bear markets it's harder to raise capital for coins that are still in that kind of establishing themselves phase. That's going to be very hard for them to attract capital in this type of environment. So you have to be careful with those. In general, I like to stick with kind of the top 20 coins, because those are the biggest market caps. Those are the safest. Granted, Terra Luna taught us it wasn't necessarily all safe though. So you still have to be diversified. I will tell you this, is that as I accumulate my longer term hold position, like I picked up a little Bitcoin, I am looking to do that to Ethereum as well if it gets down to, let's say, 825, 800. So the key is that for me in my HODL position, which I'm kind of calling it that, where it's a longer term holding position, I'm really just focusing on Ethereum and Bitcoin. Right, so my portfolio is a separate portfolio that I'm putting aside. It's more like a diversification insurance policy, and I'm really sticking with these two, mostly Bitcoin with kind of a smaller percentage in Ethereum. And the reason I'm doing that is because I don't know how the other coins are going to do. How's Solana going to do? How's Ripple going to do? How are these other ones? I honestly don't know, and that makes me unsure about putting kind of my long-term money at risk at this point. So you can see here on Ethereum, we've had an amazing collapse. We basically kissed this 850, 825 level. That was my level to kind of start buying my longer term position, very small at first. We never quite got there, so I just didn't get filled. But now we've rallied into minor resistance. And again, ultimately, I probably think that Ethereum still has more downside to go, even if it does continue up here in the short term. So for me at least, focus on best of breed. If you're someone like me that doesn't like losing money, then you need to go with the safest blue chip type cryptocurrencies.
Oh, no one likes losing money. Come on, Gareth. But let's pull up Cardano, because I know a lot of the folks at home, at least for this audience, loved Cardano before. Let's look at the chart.
So here's Cardano, right? And I'm going to get rid of some of these other lines because these are just other lines I don't want to confuse people with. But basically, Cardano is borderline maybe breaking out. And what you can see here, as I erase this last one, is you have this beautiful wedge pattern. And look at how Cardano is hitting on this line right here. If Cardano can get through this line, which is around 50 cents, 51 cents, you actually get a near-term breakout. And I think your short-term upside, your near-term upside would be back to about 65, 66 cents. So that's something I'm actually watching on the Cardano chart. Now, on the same respect, if it breaks this line here, you have a move down to about the 39-cent level here. So right now, I like the fact that it's hammering on this level. We just need one little push to get it through, and I think you get another substantial pop all the way back to this high here. Now, granted, if you look at the bigger chart, it's still way, way down there, but as a technical trader, we have to go by short-term levels, right? So if it gets to that next level, we can say, okay, well, if it breaks this now, where's your next target? And we can go from there. But right now, we're focusing on this wedge pattern. Can it break to the upside?
Well, I know a lot of folks are looking at this chart saying that here's my opportunity. I missed it the last time around. It looks like an appetizing time to get in, but buyer beware is what I'm hearing from you.
Yeah, so really, you know, a lot of people will jump in before the breakout, and then they'll be like, oh crap, it went down, right? And it broke down. So really, if you're going to play this, you want to see this get above this level here.
Okay.
Jumping the gun, it can sometimes work for you, and then other times it just goes down and will break down, and then all you have to do is look at yourself to blame in that scenario for kind of trying to get the edge, and the edge just didn't work out.
I want to talk gold with you now. So let's pull up the gold chart if you don't mind, Gareth, because this is your forecast for going to be the best performing asset of 2022. As you know, big news coming out that some of the wealthiest nations are saying, look, we're no longer going to be importing Russian gold to obviously tighten the vise on the Russian economy. Thoughts on if this will have any impact on price? LBMA, the London Bullion Market Association, coming out saying it shouldn't really have an impact, but how do you see it?
Yeah, so I'm in that same camp. Is you know, just like with oil, Russia is able to sell to China, to India. They have to discount it, but ultimately they still get that oil on the open market. And the same thing with gold. So I mean, if there's certain countries that are saying, hey, we're not going to buy your gold, there's always going to be some country that says, well, if you discount it 15% or 10%, we'll buy it all, right? So I don't really think that'll impact it greatly. And I ultimately think that gold, I mean, you just mentioned about my call for 2022 that it would be the best performing asset. So far, it's blasting everything out of the water in regards to the stock market. S&P down well over 20% and NASDAQ down 30% or so. But it's important to also recognize, and this is a big thing that people miss, is that number one, when the dollar goes up, usually gold falls. The dollar has ripped in 2022, and gold has basically been net positive for the year. The same thing with yields. When yields historically have gone up, we've seen gold get smoked and fall sharply. And just let me show you the DXY here real quick to just put this in perspective, right?
Yeah.
So if we look at the DXY, this is where the dollar was at the start of the year, all the way down here. It has had a massive move up.
Yeah.
Yep. And so that, to me, right there is awesome for gold. Like, the fact that gold is holding its own in that environment is incredible. And then if we look at the 10-year, look at the 10-year. I mean, here at the beginning of the year, we were down here at like 1.5%. We just topped out at 3.5%, still above 3%. That's a 100% move on yields. And gold is still holding its own. So these are signals that tell me, I mean, they are just screaming to me that gold is being accumulated by big money, and that gold is going to have a big run at some point in the next 12 months.
That is a very, very big statement, Gareth. Interesting. And I just, you know, just on the Russian news, I'm just wondering if the drop in physical metal would have an impact on the paper market then.
Yeah, I mean, you know, it's hard to know for sure. Maybe that's one of the reasons why gold is sitting where it is, right? I mean, so we've seen, I mean, think about this, right? The dollar has pulled back a little bit over the last 3 weeks or 2 weeks, and we've seen yields pull back a little bit, and gold hasn't really gone up. So maybe that's the internals of the market reacting to the discount that maybe Russia has to do to sell their gold, and it's kind of keeping the tabs kind of the top on gold right now. Hard to know for sure.
Okay, let's wrap things up. Do we want to look at the S&P or do we want to look at the NASDAQ? I'll leave it to you.
Your choice.
Okay, I choose S&P. I want to get your thoughts on what's in store here.
All right, so the S&P to me is in a bear market bounce. Bear market bounces notoriously are sharp and dramatic. We saw a big move up on Friday, but I have to say, this market still has more downside to go. Just like I think the crypto market will eventually go down, this market absolutely is headed, at least at bare minimum, to the pre-COVID highs. And again, just think about it logically. You have a slowing economy that's going to put pressure on earnings for a lot of stocks in the S&P 500. The dollar has been strong, which puts additional pressure on earnings for a lot of multinationals. And then you also have the Federal Reserve that continues to be very, very aggressive. So there's still a lot of buy the dip mentality, but that is going to slowly fade. And I do think that the S&P this year at least gets to 30 3400, 3375, and possibly even lower if we start to look like we're headed towards a big recession by year end. So again, there's still lots of trading opportunities, but this is a trader's market, not kind of a close your eyes, throw a dart at the board and just make money market like we had in 2021. So just be aware of that if you're an investor.
Yeah, and just a thought on oil. You've also had great calls on your oil price, Gareth. What direction do you see oil going in now? I lied. I had one more.
Yeah, no worries, no worries. I love questions. So just looking at this, right? So we have oil. Oil's done exactly what I thought. You've had this longer term uptrend. A lot of people were calling for 150. You can see this trend line, how price was unable to get through. We then dipped, and if you connect these lows, look at how perfectly oil hit right there. Now, I'm in the camp that as we get further down the year, we're going to see the economy slowing more and more, and we're ultimately going to get the fear, if not reality, of a recession, and that's going to make oil have another leg down. So I did cover my short. We were in a short on oil, and when we got down to this lower range, I took profits, but I am looking to re-short oil if it gets to like 113-ish, maybe 115. I will absolutely be looking to re-short oil for a next leg down.
Gareth Soloway, I appreciate you joining me this Monday. Thank you so much for coming with all your incredible information and charts. I missed the chair though.
Yeah, thank you so much for having me. I love letting people know how awesome the charts are and how they do really help us clear our heads, keep emotion at a minimum, and focus on really the chart, which is the biggest truth out there. So thanks for having me.
Absolutely.
It's always a pleasure.
Pleasure is mine. And keep emotion at bay, folks. Thank you for watching. We'll have much more for you coming your way on the Daniela Cambone Show here on Stansberry Research, so be sure to stay tuned. And don't forget to sign up at danielacambone.com to stay on top of all these awesome interviews coming your way. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.